Welcome to the Techno Fundamental Report for December the 19th. I spent a lot of money on booze, girls, and fast cars. The rest I just squandered away. George Best, famous soccer player, lost everything. Murphy's Law, nothing is as easy as it looks. Everything takes longer than you expect. If anything can go wrong, it will go wrong, and at the worst possible moment. Anyway, investing is a long, winding road. I've been building my portfolio now going on 50 years, and you just can't fritter your money away. You have to invest. Now, being a long and winding road, you can see here how it really has been a pretty darn good deal. Since 1982, I mean, the Dow Jones has done nothing but stay in a very healthy uptrend. Now, we know the market had a big sell-off yesterday, and we're going to talk about that. But, Ed Yardeni was really kind of bringing this to the front, where he felt that, investors were just getting too frothy. Sometimes good news is bad news in the stock market, especially when it comes to indicators like investor sentiment. So when you get too much activity where everybody's too optimistic, the auction market will definitely shift gears. John Maynard Keynes, in the long run, we are all dead. I hear all these analysts all talk about, you gotta think about this in the terms of it being good in the long run. Look, they don't know. It's impossible to predict the future. I'm reading an interesting book right now called The Patriarch. It's about Joe Kennedy and how he made his fortune in the stock market. And one of the things he talks about in the book, or he always was famous for, was the Shoeshine Boys story. He was getting stock tips in 1929 from the Shoeshine Boys, and he basically says when the Shoeshine Boys have tips, the stock market is too popular for its own good. So again, we start to see this activity where things just get too hot and they have to cool down. Now, you might want to pause your video player on this. This is a discussion of something called market breadth. Market breadth just basically measures how many stocks are participating in the uptrend. So if you get into a situation where you're seeing a reduction or a narrowing of the market, it can be somewhat of a warning. And I want to talk about that because we are definitely seeing that. Now, this is the NASDAQ as of yesterday, and this is the power trend indicator. Here's your 21-day, here's your 50-day. Now, the power trend will end once the 21-day crosses below the 50-day. But you can definitely see here with the NASDAQ, we got a change of character yesterday on pretty darn heavy volume. So I think the message here is just be cautious, kind of slow down here. Like I say, the sentiment has been hot. It's gonna cool down for a while. This will take a while. Now, where we started to see the divergences, which was the narrowing of the breadth. Here's the mid-cap stocks, the S&P mid-cap. You can see that the definite difference here between the NASDAQ, which is just now breaking the 21-day, whereas the mid-caps are breaking the 50-day in dramatic fashion. So we are seeing where some stocks just are not participating. Now, here's the New York Stock Exchange. You can see the same problem. So we started to see this and decided to kind of cool it. We just were starting to see some stocks were doing well, like on the S&P and the NASDAQ, but when you look at the small caps, again, you can see the dramatic drop here. So it's just a time to just kind of settle down and be cautious here. Here's the S&P 500. Looks worse than NASDAQ, and it is breaking the 50-day. So again, we're seeing a change of character here. Here's the equally weighted S&P 500. You can see it too has had a major change of character. Now, this could be the culprit, and I kind of think it is. This is our power index, not the power fund, power trend, but a power index where we measure interest rates over the last 125 days. And after back studies of all kind, we have found that once you go above zero, it's telling you that the Federal Reserve is probably going to slow down, which that's what they announced yesterday. They said basically we're going to cut this time, but don't expect a lot of cuts coming in the future. So as a result, the market sold off a lot. And you can see here what's going on. This is the 5-year Treasury note. This is the rate of change on that yield over the last 125 trading days. And you can see it's definitely in an uptrend. So interest rates are kind of the culprit here. However, the good news is that the main trend, the long-term trend, which in the long run we're all dead, as I said, the 200-day moving average and the indexes continue to stay in a very positive pattern. So if you have any questions, please let me know. Thank you very much.